Good afternoon, everybody. Really happy that you could join us today. This is part 2 of the how to purchase a building for your church or for your charity. If you was with us on part 1, then you would have heard some fantastic information, and we wanted to carry that information into part 2. And to that end, not only is there myself and Alex, who you hopefully, for those of you that came to or that would have seen the first one would now know, we've also brought down some other guests as well. Each of those guests I will certainly be introducing, and you'll hear a little bit from those guys, as well as me asking them a number of questions. Some may even be questions that some of you have already posted on various chats and various responses and so on back to us. So we hope today that we'll be able to answer all of your questions. We'll be able to maybe even get sort of deep and dare I say dirty in terms of you coming on and being able to ask some questions real time as well, so that everybody can benefit from the knowledge. But we've certainly brought the best of the best here today. So you should know myself on many of the webinars that we have. There's Stewart, co-founder of Good to Give. But I just want to take a bit of time just to also introduce my other esteemed guests. So you have Daniel Sovitch, and he'll certainly tell you who he is, but one of the co-founders and directors of Life Financial Solutions. Alex Dawson, as I mentioned earlier, and you certainly saw him on our previous part 1, founder and director of Alex Martin Commercial. And last but by no means least, a very good friend of mine, Shane Bowes, CEO of the Pentecostal Credit Union. So we've brought this eclectic mix of experts to be able to, answer any questions and to really get deep and dirty into how to purchase a church for your charity. I also want a special shout to Katrina Douglas, who's our marketing head of marketing here at Good to Give, and also just thanking her for putting this together. And with no further ado, let's really get into this. So what is the real reason for us sort of putting this together? Why are we actually trying to address this subject? And certainly within the church arena, we've looked at and we've said, right, there are a number of our churches, a number of ministries who are either renting properties or trying to rent properties or trying to find somewhere that they can call home. And one of the things that we've seen over the years is the challenge that there has been in terms of not just securing a property, but just trying to find somewhere where you can worship. And not just worship, but where you can also add other facilities and amenities that you'd like to give to the local community, certainly the communities in where each of you serve, okay? So the fact that I've had numerous conversations with pastors about this subject, certainly we said, well, look, we needed to really bring this to the fore. And that's certainly what we did in part 1. And again, now in part 2, there's been a number of other conversations as well. So we thought, let's just get to it, because it's clearly a subject that is really at the core of many of our leaders' hearts. So I want to first of all, hi Alex, how are you?
Hi, I'm good.
You're well? Yeah, I'm good. I want to spend less time me talking and more time me really getting the information from you guys. So I'm just going to ask you just to introduce yourself again for those who this may be their first time seeing you. Just sort of tell them a little bit about who you are. Okay,
my company's Alex Martin Commercial. I set it up 12, 13 years ago. It was the line I always use. The business was built on faith, and that's exactly what I did. I was an industrial agent, and that introduced me to the church, particularly the Pentecostal church world. And I realized there were distressed buildings out there and this huge demand that no one was taking seriously. And that's how I started selling and renting buildings to churches. And the business has just grown over many years.
Okay. Fantastic. How many churches would you say you've probably helped over the last as many years?
Honestly, I've lost count, but the line I now say, comfortably added the numbers, acquired, so putting rentals aside, acquired over £300 million worth of buildings for faith groups now.
Right, that's pretty significant. That's
Yeah.
pretty significant. Well, I'll certainly be coming back to you in a moment. I'm going to introduce some of the other guys. But I think certainly the work that you've been doing in and around the church arena, I think has been certainly life-changing for a number of the churches and ministries. And certainly we'll get to some more in a moment. I'll just take this opportunity just to introduce yourself, Shane. Shane from Pentecostal Credit Union. Hi, how you doing?
Not too bad, thanks, Des.
Wonderful. Tell us a little bit about you. Tell our audience a little bit about who you are, what you do, and yeah.
Okay, good afternoon, everybody. My name is Shane, and I head up the team at Pentecostal Credit Union, which is a community bank which caters for the financial needs of the Pentecostal faith community in Great Britain. We have about 2,500 members currently, and we provide financial services for both church groups, but churches themselves, and also any business or charity that has a connection or affiliation to a Pentecostal church, and any individual. We've been running for the last 43 years, catering to the Pentecostal faith community.
Lovely. I mean, the story behind Pentecostal Credit Union is actually a really pretty powerful one. Might be an idea just to touch a little bit on that, how you guys actually started, why you started.
Okay, so the historical origins of the credit union lie predominantly within the Windrush experience faced by people from the African and Caribbean diaspora. Many who came to this country in the 1950s and early 1960s found financial exclusion to be a real barrier, an obstacle, in their lifestyles. But also, this financial exclusion also extended into the realms of the churches, because many people came who were members of the established churches in their own home countries, also found exclusion from the mainstream church. And so that spawned the growth of the Pentecostal church movement. Many of these churches, fledgling churches, were meeting in people's homes or community centers. But as these church groups grew, they found it difficult to purchase places of worship. And so they were using the old partner system and other means in order to do so. And so there was a real space really for a financial institution that was going to cater to the needs of the diaspora. And so the credit union was born in 1980.
Quality. Well, certainly we're going to touch some more on that. I just think it's really nice just for, as you guys give a bit of an introduction, just talk a little bit about the origin, because I'm really keen for everybody to understand, the wealth of experience that we have around this, dare I say, table, certainly today. Hi, Daniel. How are you doing?
Hi, good. How are you?
Excellent. Fantastic. Good indeed. Like I've asked everybody else, tell us a little bit about you, background, what you guys actually do.
Sure. Firstly, good afternoon, everyone, and thank you for having me. So I've been in the industry in property lending now for 21 years. Life Financial Solutions, which I co-founded and the current co-owner of, has been trading now for around 12 to 13 years. We're a financial service, we're an FCA regulated financial services practice. Where we differ to most of our market is we have specialist teams in each of the specialist areas within financial services. So we have a protection team that specializes in insurance, such as life insurance, key man insurance, critical illness, etc. We have a pensions and investments team. We have a whole of market mortgage team. And then we have a team which I'm currently leading, which is the specialist finance arm, which do specialize in the likes of helping charities and churches acquire buildings and raise finance against buildings. And that's something that I've been fortunate enough with, certainly with the introduction and the support of Alex, who's in this podcast with us, to have worked on and really specialized in and really enjoyed actually working in for the last 6 or 7 years. And that's something that we do day in, day out.
Excellent. So, I mean, so a lot of your work now, most of your focused work is around sort of churches, charities, and actually trying to find solutions to basically help them to find the funds necessary to purchase. That's really where we're going, right?
Yeah, absolutely. It's a very, very world. And I know there's been some questions, so I won't go into too much detail around the difference between residential mortgage lending and lending on churches. But it's a very different world, very different types of lenders, and it's very complex. My background is actually underwriting. I started this industry underwriting loans, so I was at the other end of lending. So having come from that background, understanding how you pull finance apart and put it back together again and find the right solutions and the merit to lend is what I really enjoy doing. And I've really felt that that's given me a bit of an edge, if you like, in helping churches acquire finance, certainly the more challenging ones for sure.
Yeah, no, that's great. And I hope, just based on what our listeners have heard so far, you can certainly see that there's certainly a wealth of experience. Now, I mean, based on a lot of the conversations that I've had, and certainly, I'm sure it will unravel through some of the questions, but there are so many stumbling blocks that when our churches actually go out to find, the relevant funding or find a building, half the time they're not really ready for it. So I'm really hoping that today, by the time we've finished, there should be a full understanding, an absolute clear plan of how they may be able to go about doing the work necessary, or the work that they need to put in place early before they even, when they first think about a church or think about a building, that they're actually thinking well in advance of actually the time of purchasing, because there are things they're going to have to do to get themselves ready. I'm going to come back to you, Alex. I just want to ask you a few questions and just sort of let's shoot the breeze on this. And I'm sure you, in your usual style, you'll be as informative as.
Try.
But purchasing a building for your church or a charity, it's a different process to residential, right?
Yeah, it couldn't be more different.
Yeah,
it couldn't be more different. And everyone knows how to buy a house. Generally, you do. And you walk down your local high street where you want to buy this house, and you sign up with a load of estate agents, wait for the property details to be sent to you, and hopefully negotiate your own deal and find the building. Simple.
Right.
Commercial game. Yeah, absolutely simple. And people go looking for a commercial building, a church, with the same mindset, and it's a completely different world. Maybe slightly different outside London, but within London and the commercial sector, it is hugely competitive, and there is no high street to walk down. And there is no obvious agent to pick up the phone and ring. There are hundreds, thousands of agents, commercial agents out there, and they could be based in Harrow but selling a building in Erith, for argument's sake. So there's no logistical way of going, I want to be in this area, I want to use that agent. So that's where I come in, and I've specialized in that sector. And the agents, and in my humble opinion, you need an agent acting for you to give you access to that world. If ever a building gets to the market for sale with a marketing board on it, I guarantee 10 developers have already appraised that building, and various other commercial agents who are then getting it are still selling it to their pets. It will not get anywhere near where it needs to be to the church market. You will not get anywhere close to that. So you need an agent out there who's submersed in that world, who can dig out those things, who people know to come to, and therefore hopefully will deliver you. So you've got to pay for it, and that's the problem. A lot of churches don't want to pay for that service, and actually I'll put it out there: you don't pay, particularly a good agent, you don't pay unless they perform and they deliver you. If they say, I want to pay for your time, I'd stay away from them. But they say, yeah, I can find you a building and then deliver you a building, they're worth every penny. So that's the difference.
Do you think so for those organizations, and there's always, sorry, not organizations, but for the ministers, their teams, they go out, they see an old disused cinema.
Yeah,
right? Cinema's probably got a little board up, or it's just been disused for ages.
It won't. I've already done that deal, I'm afraid. Yeah, but okay.
The likelihood is everyone's already, all the agents are already all over it. That's really what's being said.
100%. So if that building's going to come to the market, the chances are I've already been offered it 4 or 5 times via developers, because they've been offered it, and they're saying, should we be buying this building? Now, developers will go and buy, and they'll buy with their usual development resi hat on. but then they'll come to someone like Resi Development Hat, but they'll come to someone like me and say, look, are we missing a trick? Is there another exit? Do we put in planning and wait 2 years to get it and build this thing out to make our profit? Or is there a church that we can sell it to and make £500,000 on the turn, or £100,000? Now, people don't like the idea of someone sitting in the middle and making money on them. But yeah. I would say the majority of the bigger deals I do are off market. And I have to say to the church, look, we're getting this because this developer's got control of the building. However, you are paying the right money for it. It's off market, and be happy for him that he's making 100 or 500,000 pounds. Just be happy. You've got it. No one else has got it. It's the building that you want. And it's a hard pill to swallow, but that's how the commercial market works out there.
Okay.
And the reason I see that stuff is I used to be on the other side of the fence. I used to site assemble for developers. So I have those connections, which is why I'm always being offered stuff off market, which I then take to my database.
Right. Okay.
Yeah.
So leading on from there, what would you say are the some of the common sort of misconceptions that churches have around purchasing buildings?
They first think it's easy. Yeah. They also ring me up and say, send me all the properties you've got in South London. Yeah, or I'm looking in this area, I want that. There are none. Yeah, I mean, these buildings are unicorns. When they come, demand is phenomenal when they fly out the door. So it's a huge misconception. What else can I tell you? Also, actually, I get the call that the economy is doing bad, property prices are going down. It must, and it's on the market for 500-600 grand. Okay, shall we offer 4? And I'm like, no, to secure this building, you're going to have to offer 8. And they don't understand that as you drift into sort of lower areas, I don't know, area for plaster, where it's not high incomes, and you think property values will go down. It's full of different religious groups who are servicing those people who need those services, and actually those prices are going up, and the premium value there isn't residential development or everything else, it is church. So they don't realize demand is phenomenal, and this sector values are very high.
And I guess that's what you're referring to when you talk about the acorns, the fact that, or acorns, they're very, very few. It's like it's like finding an acorn in winter, you got to really look after that. So no, I appreciate that. Okay, so typically, just tell us about some of the mistakes that you've seen churches make when trying to purchase a building. What kind of mistakes?
The last time I remember, I think I said to you, the biggest mistake I always say is just stop looking, because they go out. A pastor will say to his flock, "Go out there, my flock, find me a building," and then I can get 10 calls from the same church from individuals saying, "I'm looking for a building," and I'm like, "Oh, you've already called me, or one of your colleagues have already called me." That's number one. You don't want lots of people looking. You need to give that job within the ministry to one person. Yeah. So the same message is going out there. Secondly, I would say, sorry, lost my thread there for a second. I would say second mistake would be why have I just got a mental blank? Yeah,
no, I'll tell you what, actually, because it leads on quite nicely to another question I sort of want to ask, which kind of ties into mistakes.
Sorry, my second, which is a very obvious one. I do apologize, I'm embarrassed.
Right.
The second one is they will go out there and they'll look, and then they'll call another person back to come and have a look at it, and then the final trustees, everyone goes forth, and the agent gets excited and he thinks he wants to the agent thinks, oh, these are definitely my buyers. You put your offer in, the price is agreed, and at that moment they go and sort out their funding, and the whole deal dies, and they have wasted everybody's time. And it's actually it's a very bad mistake. It's been going on year, and it's why most commercial agents, and it's prejudice, you could say that, but also it's probably on average the right decision. They hear an African accent, a Jamaican accent, I'm looking for a church. They don't give you any respect. They don't want to deal with you. They've been messed around in the past, and they'll wait for a more commercial minded operator to come along.
Yeah. Yeah, no, and that was kind of what I was leading on to. You know, I've come across organizations, like you say, they've done all of the groundwork in terms of, you know, like you say, knocking the doors, doing all of it. Yep, 3 or 4 of the trustees at separate times have all turned up, so it's all been an inconvenience in the first instance, just trying to get into the building, which sometimes, you know, trying to make a point.
Here's one of my lines. I'm cutting you a little bit. If they say, can we view it at a weekend? Yeah, commercial agents don't view work weekends. The moment you hear that, you're like, okay, they're not that organized. If they can't get out within commercial hours, they're not serious.
Yeah. I hear that. And so, yeah, like I was saying, you know, you get a number of people coming down and seeing, and then all of a sudden, now we're going to talk about really the hardcore cash. You know, right, is your deposit in place? Is your such and such? How much of that, I mean, obviously your experience now, no doubt tells you to make sure these things are, there's a certain due diligence that I'm sure as agents you must be doing in a bid to try and help to as part and parcel of a schooling, I guess, education, because, you know, if you don't know what you just don't know. What's the situation?
So no, normal agents don't know. I'm not a normal agent. I'm very specific. Yeah. So the first thing I always ask is, what's your charity number? And that charity number means I can instantly type it in, have a look at your turnover, and then I know if you're serious or not about the building that you're looking at. And you know, 9 times out of, actually, I would, it's a horrible ratio to say, but I reckon 1 in 100 pastors I speak to who I do that for is capable of buying the building that they're looking at. So it's like you have to go and do it, which again is why other agents won't deal, because the deals never really happen.
Right.
So that's why an agent would like to deal with me, because I'm only as good as my last deal, and so therefore if I'm putting someone forward and saying they will perform, it's because I've done that due diligence.
Yeah, I mean, I think that's, but what I like about that is that, like I said, it's almost a bit of education for the churches that are sort of knocking your door, just making sure that, you know, they're ready. You know, I think that's important, and like you say, that there is that whether it's prejudice and prejudices unfortunately do build up. But if a particular group continue to do the same thing without the right sort of planning and management, then in essence, you know, I guess you do develop a bit of a name for yourself, which is really what we're trying to avoid. And I can see that there's a number of people that are sort of raising their hand at this moment. We will come back certainly to some questions, so just hold on to that. We won't miss anything. We've got Katrina in the back, who's just capturing all of the questions, because what's happening is there'll be questions that are being asked that maybe several people are likely to ask the same or very similar questions. We'll then be able to collate those questions and address them at one time. So by all means, put your questions up, and then we will get to live questions where we'll take them live. So just hold that for now. Okay, so yeah, if I'm coming down to the last couple of questions on you, Alex. I just really want to ask, what would you say are the general basic steps that really anybody looking to purchase a property should take, just as a bare minimum, basics?
Okay, every day I have this conversation with the church. And I'm not a mortgage consultant or financial consultant. We'll leave that to Daniel Sovitch. I have my very, very basic formula, which you'll probably cringe at, but I look at your annual turnover and I say, okay, bank's going to lend you 4 to 5 times that annual turnover. And Dan, I know it's a more complicated calculation than that, but that gives me ballpark. So if they're turning over £100,000 a year, I'm like, okay, the bank's going to lend them 400 to 500 grand.
Yeah.
The rest they have to make up cash. And the other mistake, people think they've got 10% cash, 10% deposit, they can do the deal. Nope, you need 30% deposit minimum. That's what I always say. And even worse than that is, because the market's so strong, actually there's particularly with the smaller purchases up to about £1 million, you don't just, even if you've got your 30% and you've got your mortgage, the bank are going to look hard at the building and say, well, have you got the money to do some refurbishment? oh, and there's a shortfall because this building's going to cost you £1 million to secure or 900 to secure, and you have to make up that shortfall, which may be another 100. So minimum 30%, but in reality, most faith groups are going to need 40, 50 if they're going to secure it in the current market.
I guess not to also to mention the fact that there are going to be additional costs in terms of agent fees and things like that that need to be built into that. So which will need to be paid. Okay, but it's actually leading me on to, it was just something else I thought of here, and it's probably more of a question for Daniel, and Daniel will certainly touch on this when we come to you. But when you're putting that calculation together, because that's okay for the here and now, but typically, how do the lenders, and it's definitely one for Daniel, but how do the lenders view sort of, churches, because the income is based on members, and if the church hasn't necessarily been around for that long, how is it viewed?
Am I answering that, or are you giving it to Dan? I mean,
I'd like to take a bit of your experience. I'm sure.
Okay, so the church, I think the banks aren't that bad. There are specialist banks like Charity Bank and Kingdom Bank who understand that world. And I'm sure Dan will give you some examples, because we've done a lot with Charity Bank between me and Dan. So Dan knows how to really jolly them up, because they're not the quickest, that's for sure, but they do at least have the right mentality and they know what's going on. But even the likes of HSBC, Barclays, I've done deals with all of them. They usually have someone within their team to do it. But then that's where I don't think the church or myself is the right person to be having those conversations with the bank. I have my basic formula, and at that moment, I want to hand it to someone like Daniel to say, mate, you drive this, you tell me if it's capable, make it happen.
Yeah. Okay. Fantastic. So lastly, but by no means least, because you'll certainly be involved in some of the answering of questions that will be coming, what are the benefits of having an agent such as yourself?
It's easy one. It's just credibility. Agents like doing deals with agents. There's repeat business there, and they want surety. So when they're sitting opposite Pastor Addy or Pastor Ollie, they don't really know what he's telling them is the truth. And he may say, hey, I've got the money, it's coming, and can be very believable. It's coming from Nigeria, or it's coming from America, or it's here, and I'm just selling a home and it's about to happen. They just don't know, and there's no credibility. But if they speak to me, it's like, okay, you always deliver. I believe you. All right, I'll recommend to my client, we'll do this deal.
Yeah. Okay. So lastly, then, and no doubt everyone would want to know this, because if they're certainly working with you, at what point do you think, I can get this across the line, they are a credible church or a credible organization?
Again, I do my very basic calculation. And I mean, sometimes it's obvious. They'll show me a bank statement with £4 million in there, but outside that, I will do my basic calculation, and usually I will fire them to Dan. I've been working with Dan for 6-7 years now, and he has never failed me. So, I mean, he'll tell me very, very quickly, no, not a chance, or they have a chance, and he gets it over the line. And we've had a couple of torturous ones, where I've been told by other brokers it can't be done. It's actually about 6-7 years ago when I got to know Dan. I was being told it cannot be done. No one's going to lend. 3 weeks later, Dan delivered the funding and we did the deal. Great.
I guess there's no better time to turn over to Dan. So thanks, Alex. That was great. And I hope everybody really was able to take that on board. Fantastic insight. But I think it's great now to go over to basically the man that kind of makes it all happen. So Dan, just before I start with the sort of question, some of the questions I've got in front of me, the question that I had for Alex, which by rights really should have been yours. How do the banks, I mean, as a broker, you deal with this all the time. You're obviously, we've touched on the fact that there are a number of banks that you work with, and you've got very, very difficult deals over the line. But how do the banks typically view churches, and how do they view them?
Firstly, if you don't mind, I just want to thank Alex for those amazing compliments. I won't be paying you later, but
just to let you know, the payment's already been made, but that's okay.
Unbelievable. I knew he could perform financially. Okay, so I mean, it's a good question, and it's a question that will probably cross over in many of the questions I'm sure I'm going to be asked. Look, affordability, assessing affordability and income for a church is there are some similarities that looking at any business. You know, Alex quite rightly said, we're fortunate to have that as public information, where we can look at a charity accounts and we can look at key variables such as revenue. I'm not quite sure it's quite 3 or 4 times, Alex, but there is some theory behind that. Different lenders work in different ways when it comes to income. Ultimately, what we need to look at is one thing that we like to look at is if we have a charity or a church that's been paying rental income for a number of years. Let's just say, by way of example, if a church has been paying £5,000 a month on a lease for a particular building that they've had for a number of years, and they want to transition into owning their own building. And we know that a mortgage, based on, after fact finding, and we looked at the type of budget that they have, and we know that a mortgage is going to typically cost them £3,000 a month. And we can prove to a bank that they've consistently paid £5,000 every single month for a number of years on their rent. That's a big tick in the box, assuming that they're, handing notice in that lease and they're replacing that lease with a new purchase. And that's not the only area, of course, but that definitely helps because it certainly proves track record and affordability. We look at things like surplus income as well. So after all their costs, what money do they have left over? The last thing a bank ever wants to do is strip out every single penny. So it's really kind of they're at a breaking point. One of the key variables, just to kind of wrap up the point, is we look at what is the worst case scenario interest rate. So we all know what's happening in the economy right now. We all know that the Bank of England is sitting at 4.25%. And the way a bank would typically price is margin plus base rate. So if a bank was charging something like, 3.5% as a margin, and we think that worst case, the base rate may go to 6%, could that church afford to make their monthly repayments every month if their interest rate was 9.5%, which isn't impossible? And it would be foolish for a bank to assess affordability purely on the basis where interest rates are now. Yeah. So they're the kind of things that we look out for. So rental income, do they have track record? Surplus income, could they afford the monthly repayments based on a 9.5% stress test interest rate?
Yeah. Okay, so I guess some of the things that I'm picking up from there, and it's some of the things that I often talk to churches about, which is looking at additional revenue streams, because just leaning on members and tithes and donations, which is your free will your free will income. Would the banks maybe look at that and think, well, what happens if for some reason free will sort of went down a bit? I mean, you imagine within the last few years where we had the whole COVID situation, and I know churches that just shut down literally, or certainly there was a spiral downwards in terms of income. Do the banks, no doubt, when you start looking at risk averseness, I guess that's, right?
I think that point all comes down to sustainability. I speak to various churches that say to me, we're going to go and do this, and we think we can get donations of X, and can we use that as income?
Right. Yeah.
We really have to dig deeper and say, okay, is this a bit of a one-off thing, or is this something that's sustainable for the next 10 years? Yeah. And if we can provide comfort to a bank and provide evidence that we believe it's a new but sustainable longer-term revenue stream, then it absolutely has a positive influence in affordability. One prime example is, if I've got a church that wants to buy a building and the building probably is too big for them based on their typical attendance rate and number of members that they've got. So we would look at, say, okay, could we carve some of that out, and could we then rent that part of the building out? And they might talk to someone like Alex, who can 99 times out of 100 source a tenant for them. And then we know that if we can tie that tenant in that part of the building for, on a 10-year lease, that's a great example of sustainable guaranteed income. And then we could utilize that income as part of their affordability.
Right. Doesn't affordability need to be seen for a period of time for it to give a bit of comfort in maybe the bank's mind, rather than you're at this kind of business end now and you just don't have this, you've got the idea of affordability, but you just don't have it?
Absolutely. I would say that's 85% of what we need to see. But having said that, there are some lenders in the charity world that will put a big emphasis on projected income as well, because we all know that, you know, your affordability can change dramatically once you own your own building. You know, your costs change, your income can change. So there is a big emphasis on what do we project the income's going to look like. Obviously, the danger and the challenge behind that is we can't guarantee it. But you know, I've had many scenarios, and you talk about common mistakes that you know, one of the questions you asked that, Alex, if we look at that in the funding world, I'm sure Shane will agree, is you have churches that they have the cash deposit, they have 35%, and they say moving forwards we project our income's going to be X because we think we can get an attendance rate of Y, we can raise X amount of funding, we can support the costs, and it looks great when we look, and they get their accountant to do these really fancy projections, but then we look at their accounts and we say, hang on a minute, you're asking for a 250% jump from where you've been the last few years. Is that viable? Is that possible? And so we do look at, of course, there's a bigger emphasis on financial track record, and that's the same for any mortgage. You know, if you're a business owner, and we have a look at your accounts and you're looking to buy a house or you're looking to buy a commercial building, it's all about what did you do in the past, as opposed to what can you do in the future. But we can't underestimate the importance and the value of being able to evidence also what we're going to do in the future as well.
Yeah, no, I understand. Great. So just in terms of, because we're going to have a number of listeners that people have tuned in certainly today who are not of the larger variety of church, and we've probably spent a bit of time talking about those churches who are able to, and they're probably the ones who are a bit more joined up. They can talk about projected potential income. They can talk about, you know, having come out of a lease, having spent £5,000 a month. I mean, you know, some of our churches will have only just started their ministries. All right. And as such, they've been going for maybe a year, 18 months, give or take. So the track record isn't really there. I mean, how much of that have you actually got involved in, or what's the likelihood of those churches being able to say, look, these are our ambitions, this is what we want to do, we're kind of putting in a sort of 2-year plan to make this happen, or whatever? What's your thoughts around that?
Yeah, there are a number of scenarios like that. And again, going back to the common mistakes piece, is the first thing, and maybe Alex can vouch for this, but the first thing a charity or a church tend to do is their priority is what type of building do I need? And then they spend hours and days and weeks looking for the type of building that they need, but they actually don't even know if they actually are set up and they can financially support that type of building. And that's the wrong way around. And they need to actually look at, well, what is actually viable? What can I afford? And there's so many different variables that they need to look at. I would always advise charities to talk to someone like myself, because it's really important that we get the plan together. And you mentioned there's around, you know, having a 2-year plan. Sometimes it's 2 years, sometimes it's 1 month, sometimes it's 5 years. It very much depends on where they're at in their journey, and what their finances are. And there's a number of different scenarios that I will run by these charities that come to me if they're new or as their first time purchase. And it's just about getting everything in order, making sure that they're ready to go.
Right. Just very quickly, I'm just going to fire. I appreciate that we've got people wanting to ask questions. And I'm also mindful that time is running, and I'm terrible with time, by the way. I'm normally good at turning up to a meeting, but a meeting can last a good few hours. So, but this is really interesting. So please just bear with us today, because there's a lot of very, very good stuff to come out of this. And I really want to ensure that, you know, those who are listening, who really want the help, are able to get the help. And, you know, one of the challenges I find is that very rare do you have this sort of mix of individuals who can actually come and help to provide overall solutions. So just bear with us. We're certainly going to get there. Is there a huge difference between residential mortgage and sort of, you know, the church mortgage? Is church mortgage seen more as commercial, I guess, right?
Yeah, it's a lot more aligned to requiring a commercial mortgage. Again, a little bit like the question, the early question for Alex, where someone looking to buy a house or a flat can walk down their high road and they'll have a number of different agents that can help them with that, and it's a fairly simple solution. And the same principle applies to conventional residential lending. They could walk down their high street and speak to their average mortgage, residential mortgage broker. They can walk into a residential estate agent, typically meet a mortgage broker that's on site there that will be able to access your Santanders and your NatWest and all the different high street lenders. It's a very, very different world lending on a church. It is similar to commercial property. Like commercial property, it's an unregulated loan. So it doesn't sit within the FCA remit, which allows banks to have a little bit more commercial discretion as to how they would assess a church and its finances. I think one of the key differences as well is reputational risk. There's a number of lenders that, although would absolutely love to support a charity, because everyone wants to, support a charity, but they're a little bit anxious around the reputational risk. So we lose a number of lenders that we can access. So a lender's got to be geared up for it. And there's a number of specialist lenders out there that, Alex mentioned, the likes of Charities Bank and Kingdom Bank, to name a few, that really understand charities. And income is assessed in a very different way. We've touched on that before. To your average mortgage on a house and a flat, we look at projections, we look at performance, lots of different variables, but it's just about knowing the right person to speak to, and it's all about presentation as well. With residential lending, it kind of, if you're a mortgage advisor or you're a bank, it kind of flows quite nicely into, okay, what's your income? What's your deposit? Does the income multiple stack up? Does your credit stack up? And the journey is very predictable. With lending to a church, it's not a predictable journey. It goes up, sideways, down. There's so many different variables, so many things we have to look at, and it just has to be presented in the right way, which goes back to the point that you mentioned about certainly those early on in their journey. It's absolutely imperative that we get the order right and we present in the right way. And that for me is the key difference to residential versus church lending.
Yeah. So last question here, and I guess we've touched on it throughout this conversation, but just for clarity, what are the actual steps, basic steps that a church should go through in order to secure a mortgage? Sort of the ABC sort of steps. If anybody was making notes right now, what would they do?
Well, again, back to some of the points that you quite rightly said we touched on. The first thing I strongly advise them to do is speak to someone like me. And then we go through the next steps. So we need to put a bit of a focus on I think there are 4 key areas that we need to focus on to get to that point. The first is, do you have the right deposit? Do you have at least 35%? I would say some are 30, some are 35%. Now, they won't necessarily know what 30 or 35% equates to unless they've got a figure in mind. So sometimes we have to work backwards. If they say, I know I'm looking at a building of £1 million, then we know that, 35% is something they need to know they can get or they can raise. So step number 1 after speaking to someone like me is, do we have the cash in the bank? And again, another thing that you touched on as well, it's not just about the deposit. You're going to have legal costs and agent costs and setup costs and, perhaps refurb or renovation costs. So we need to look at all of that. Step 2, again, is a point we touched on. We look at affordability. So I would work with a charity to have a look at their accounts now. We can make a very quick decision as to whether they're ready or they're not ready. And then we start looking at working with, this is really important. I think what's really valuable in the journey is to make sure that you're, if you're a church that has a financial director or an accountant or just that finance guy, if you like, it's really important they get involved, because I will work with them to make sure we understand what the projections are, what are their costs going to look like, what is their ongoing income going to look like. As you quite rightly said, there's how can we drive more income. So step 2 is we would look at income affordability. Step 3, now this is really important, certainly for those that are starting out, is we've really got to understand, what do you stand for as a charity? You know, what is your story? What is your profile? I often ask for a CV for all of the trustees as well, because that can really add credibility. And we've got to be able to tell the story to a bank of what we stand for, who we are, what is our profile, and what are we doing for the community as well. And that bodes really, really well for banks that like to back charities.
Yeah.
And the final step, and these are the kind of getting your ducks in a row piece, these 4 steps, right? And the final step is, does it make sense?
Yeah.
You know, always think about, some people get so wrapped up in, wow, this build is incredible, I'd love to see, you know, this become our main place of worship.
Yeah.
It doesn't really make sense. If you're a charity that has a fantastic track record and reputation in somewhere like South London, as an example, right? And then you speak to Alex and he says, we don't have a building right now in South London. And they say, but Alex, I've seen this fantastic building in Northwest London, right? But yet all of their typical members are based in South London and they have track record in South London. You know, they do a lot of work for the community in South London. Does that make sense? Maybe it does. So it's all about viability.
Yeah.
So they are, for me, the 4 key steps that I would look to work with on charities to make sure we ticked all of those boxes. We can tick all of those boxes, I think we're there.
Okay, no, that sounds good. I'll just add to that, just in terms of our churches, just get your mind right, your thinking right, you know, and just make sure, yeah, like you said, you've got all your ducks in a row. No, thanks for that, that Daniel. Really, really informative. And again, you know, there's going to be a whole host of questions, I'm sure, that will, you know, I'm sure you'll be able to answer. But by no means last, but by no means least. Hi, Shane.
Hi, Des.
How you doing? You good?
Not too bad, thank you.
Excellent, excellent, excellent. So I'm going to just ask you a few. In fact, I know you touched on earlier on about the story of the PCU, which was fantastic. So I'm not going to ask you to go over that again. But what I will ask you to do in terms of the Pentecostal credit unions is explain the difference between the Pentecostal credit union and a typical, say, high street bank. What's the difference between the two?
Okay, so there are a few key differences between banks and credit unions per se, not just Pentecostal credit union. And I guess the first major difference really is in terms of economy of scale. So, you know, the banks are dealing in the trillions and we're dealing in the millions primarily. But one of the things that we have in common is that credit unions, like banks, are regulated in exactly the same way. So we're regulated by the Financial Conduct Authority and the Prudential Regulatory Authority. Deposits held in the credit union are also insured up to the first 85,000 by the Financial Services Compensation Scheme, which also indemnify your savings and deposits in high street banks. And we're also members of the Financial Ombudsman Service. So if you have a dispute that can't be rectified with us, you can take it to the Financial Ombudsman, as you do with a bank. So, and in terms of regulation, we are very much the same. We offer similar services that you get in a bank. We've got full suite of online services, just like a bank. But in terms of the differences, one being economy of scale, two being one of the major differences is in whom we serve. So banks serve anybody. You know, once you've passed the due diligence, you then qualify for a savings account or a mortgage. Whereas credit unions, you have to meet what's called a particular common bond. So typically, that would normally mean you have to live or work within a particular locality, live or work in any one of the London or nationwide boroughs, and then you qualify to open an account in your local credit union. For Pentecostal credit union, we're slightly different. We don't have a live or work common bond. We have a common bond based on faith. So in order to join our credit union, you have to be able to demonstrate a relationship with a Pentecostal church and reside within Great Britain. So that means you don't necessarily have to be a signed up member or attend the church every Sunday, but it does mean that you have to demonstrate that you have attended a church, say, within the last 12 months.
Okay.
And then another major difference between a bank and a credit union is the fact that in a bank, it is owned by a small group of shareholders, They own the bank, they set the fiscal policy, they decide on what happens with the bank. Whereas in a credit union, it is the members or customers that use the credit union that actually own it, and they decide the fiscal policies and who sits on the board.
Right. Okay. So I guess from that point of view, the actual members, those who demonstrate the an ability to be or qualify to be a member of the bank, they're the ones who are basically in control.
Absolutely, it's a far more ethical way of doing your financial business.
Okay. I mean, we've had this conversation before, but I guess what does that actually mean in terms of maybe some of the benefits to those members, versus what might be benefits to shareholders of a normal bank?
Well, the shareholders in a typical bank, then they decide on what the fiscal or strategic objectives of that bank is. So if they want to invest in nuclear power, for example, or in some other entity which you might not agree with, you can't actually say or have any influence on what the fiscal policy of that bank or strategic direction that bank is traveling in. Whereas in a credit union, you turn up to an AGM, you have a vote, you have a say in what the strategic direction is. And our members are fully behind the strategic objective of the Pentecostal Credit Union, which is to support the Pentecostal churches and the people that worship within them.
Yeah, I mean, and now this, and it was important for me to sort of go through that, because I think it's important for our listeners to have a very good understanding and idea of why the Pentecostal Credit Union or credit union in this respect is very, very different to a bank and the benefits thereof. If we just go back to the origins of the PCU and really what it was born out of in terms of trying to get properties and things like that for the diaspora, as you put it. Do you want to just touch on that just a little bit?
Yeah, so as I mentioned earlier, one of the key forms of financial exclusion that members of the Windrush generation faced when they came wasn't just financial exclusion in terms of individuals finding places to stay or starting a business. It was also about finding places of worship. Now, due to many Pentecostals worshipping within their own homes and within community centers, as the Pentecostal faith grew, many of these early places of worship, they became too small for where people were. So these many people in the Pentecostal churches were now seeking larger premises in which to worship. But when they approached banks and building societies for mortgages and loans to purchase these places, they found it very difficult to get lending. And many people had to use their own homes as collateral, or had to take on extra jobs in order to do it. And so there was a space really, or a space in the marketplace for a financial institution that was going to really cater to the needs of the financial, the Pentecostal faith community.
Right. So whilst you obviously you look after your members, can be individuals who, sort of like you say, have demonstrated that they are eligible to be members. A significant part of the work of the PCU is to help churches with purchasing property, right?
Yes.
Right.
Yeah.
Okay. So how has that gone? How have you guys really been able to sort of help? How have you guys been able to extend that arm to churches or faith groups that are ready now to purchase?
Well, as I said earlier, one of the key objectives from the founding of the credit union was actually to help Pentecostal church groups purchase places of worship. And I guess we have a firm understanding about how Pentecostal churches run, about the sacrifices that people will be willing to make for their church, and the Pentecostal church is one of the oldest and most stable institutions within the Black community. And we understand how it runs and have the sacrifices people will make. And in the early days, it was often lending money to individuals or trustees of Pentecostal churches, who would then take loans and then use it to buy places of worship, and then taking responsibility for those loans in terms of the repayments. They would get the money from the churches and then repay the credit union itself. However, the business model has evolved over time, so that now churches themselves, as charities or businesses, directly approach the credit union as they would for a bank or building society. And then we simply do the due diligence on the church and the property, and then make a decision on the merit of that mortgage application.
Right. So I guess I mean, you know, I asked the question to Daniel. I'm going to pose the same question to you, and you're probably, you know, you're there. You literally are part and parcel of the team that will help make these decisions. Do you look favorably in terms of, right, you know, a church has come in, they've maybe been running for 18 months, they have not built up a huge track record, but God has been good, and, you know, they certainly believe and trust that, you know, he's going to deliver that which he said he would. How do you sort of view that? I've purposely given it that spin because you know.
Yeah, because I mean, typically you have to simply assess a mortgage or loan application on its merit. You know, is the property that the prospective church want to buy, is it affordable? Is it fit for purpose? Can they afford it? You know, they've only been running for 18 months. You know, what does their audited accounts tell us about them? What do the trustees, the creditability of the people running the organization, what do we know about them? So, I mean, it is all, I mean, I can't give a definitive answer because, you know, it could, but those are the things that we take into account before we make a decision about a mortgage application.
Okay. I'm asking you, what are some of the benefits of securing a mortgage with, say, you know, a credit union like yourselves?
Okay, so one of the main benefits at the moment is the interest rate. And I heard Daniel talk earlier about what a typical interest rate might be for a commercial loan with a high street bank, which might be between 7 or 9%, or maybe even higher than that. Now, the fixed interest rate at the Pentecostal Credit Union for any secured loan over £50,000 is fixed at 5%. So one of the major advantages right now is that the credit union interest rate is actually cheaper than it is on the commercial market. Another advantage of lending from the Pentecostal Credit Union is that there are no arrangement fees or early repayment penalties. So if a church grows and its income grows over time and it's able to increase its amount of repayments on its loan, it can do that at any time without penalty, without restriction, and pay off the loan without any penalties. The maximum time we can do a loan is for 25 years. So, and any deposit that the church have in the credit union also attracts a tax-free dividend, you know, set annually depending on what our performance is. This year we'll be paying a tax-free return on deposits of 1%. So if they've put in a deposit and are paying down the loan, they also know that the deposit they've put into the credit union is also gaining some traction at the same time, which they can then use at the end of the term or part way through the term to pay down on the mortgage.
Yeah, sounds good. There was something we touched on previously, not in this meeting here, where we sort of spoke about the amount, the maximum amount that could be borrowed against a purchase. I think that's probably quite important, and also the interest, not the interest rate, but the deposit that would be required for that amount. Do you want to go into that just a little bit, because I'm sure some of our churches would look at that with glee and interest.
Yeah, so we typically will request a deposit against the loan of 10%. So if a person is going for a loan or mortgage of £100,000, they would need to have at least £10,000 saved in the credit union in order to be eligible to apply for the loan of £100,000. Now, credit unions, there is a regulatory restriction in terms of how much we can lend to individuals and corporates, and currently the ceiling is £500,000. So we can lend to any entity up to £500,000.
Okay, excellent. And just the last question, because I see hands are raising and even more so. Just a very, very last question, and it's again very, very similar question that I'd asked to Daniel. What would you say are the steps for securing a mortgage with the PCU?
So we normally require an institution to be registered either as a charity or a business. We'd then be looking for that person to open an account, because one of the differences between a bank and a credit union, as I mentioned earlier, is that we can only lend monies to members of the institution. So a person has to have an account in the credit union in order to apply for one of our products. So once they've applied, we would then ask them for normally 3 years of their audited accounts. We'd ask for 6 months of their bank statements. We would run a credit check both on the institution and the trustees or signatories to that account. We would then take a survey, full structural survey on the property that they're looking to borrow, and then do a loan to value estimation, and then an affordability check, and or any other things that we have to do before giving a decision about a mortgage.
Okay, great. That's really appreciate that, Shane. Alex, Daniel. In fact, Daniel, I'm sure I saw you probably put a finger up at one point. Was there something that you wanted to add to something that Shane was saying, or?
No, I apologize. I don't know why I didn't know.
No worries, no worries. Just want to make sure I include everybody. We're all inclusive, right? Okay, so yeah, no, I just want to really thank you guys for your knowledge and your insight into this subject here, which is a real huge subject. And like I said, we've all been doing this for a number of years, and we've seen the shortfalls and the shortcomings and so on. And what you guys have had to say has absolutely been fantastic. What I'm going to do is I'm going to really want to just sort of get into some of the questions now as quickly as possible, because I'm very, very mindful of time, and there's still quite a bit to get through. So at this point, I'm going to hand over to you, Kat, if you're Katrina, if you're around.
Yeah, I'm here. That was so good. Thank you all for your inputs there. Des, before I get into the questions, can you tell us about Good to Give? Good to Give's role in all of this. We've put this together, and yeah, we want to hear about Good to Give and how we help churches get prepared.
Well, it's funny actually. We it's a great question, and I'm glad you asked me the question, because obviously as time running away, I didn't want to go into it in too much detail. But we actually started Good to Give really in a bid to help churches to maximize their income, and we did that really through gift aid, and we understood that in order for them to really be able to maximize, it really wasn't something that they were going to be able to do manually. We knew that they were going to have to embrace technology in the ways in which we actually deliver the service. We then sort of went quite quickly and rapidly into charity accounting and charity registration. And it was funny, by looking at all of those three entities, we're actually able to start seeing where a number of the churches were really falling short. And as such, we've been, I would like to think, and certainly through the amount of calls we get and the sort of business we do, we've been a really good sort of sounding board and listening ear, and being able to pull a number of very, very key industry-based people that otherwise, if you're just not in the know, you just don't know what you don't know, and you can't necessarily gain access to people. I mean, this meeting is testament to that in its own right, in that, we have a broker here, top broker. We have a fantastic agent, probably one of the top ones in London and around the country, and Alex. We've got the head of the PCU in here. There's not too many scenarios where you get that eclectic mix of individuals together that can really breathe, the knowledge that they have. So that's really part and parcel of our mandate as Good to Give, is not just bringing individuals together, but actually helping to start the whole process in the first instance, trying to talk to churches. And we do this on a regular basis now, where we talk to churches about getting their accounts and their filing and their recordings in order. If they've got long-term aspirations or even mid-term aspirations, think about those and let's get the planning in place from very, very early. Dan mentioned, if you have a financial person involved, or if you have a great story to tell, put those things together. Those are things that we've been talking about for years, especially when we talk about you getting your year-end accounts completed. And one of the things that's required for a charity when you do your year-end accounts is your trustees report. That is an awesome place for you to really start bragging about what you did during that accounting year. The people you've served, how you've gone about doing your work. So we ask you to really get all of that into it. Basically builds a story. And I think, Daniel, agree with me that it's that story that you're able to then take to lenders, and especially when banks and credit unions and so on are looking at you, the story is already done. It's funny. It's really funny, Dan, that you mentioned, looking at trustees and trustee CVs. I often speak about making sure that the trustees that you have on your charities are individuals who are really going to add some value. And I come across sometimes, where trustees are on there, maybe are not adding as much value as they could, or they need to skill themselves up in order to be able to really help the church or the ministry move to a whole nother level. So yeah, those are some of the things there that we do, Kat.
Thanks, Des. That's really, really helpful. Right, so we're going to get into questions now. We've got quite a few, and I see most of you are here. Can you believe we had 75 of you on this call, and over 100 registered? So the real demand for this. So thank you, all of you panelists. So let's get into the questions. So first, from Fidelis, my church is based in Bradford, West Yorkshire, and at the moment we are growing and outrunning the building we are renting. We are looking at buying our own building. Our challenge has been being able to raise money for a building. I want to know if there is any of your guests here who can give us direction.
Okay, who wants to take that?
Raising money in a sense of, because obviously there's two forms of raising money. The first and most important is, raising money for your deposit, and, where, Shane and I spoke about having, certain deposit amounts that you need to have in order to then raise money for finance. So is the question around raising money for deposit, or is it the question around raising money for a mortgage?
Fidelis, if you are still here, please add some clarification. If we were to say both, what would you say, Dan?
Well, it's difficult for me to really. I wonder if that's a question more for Des around kind of going to your members and trying to raise money through donations. I often find that speaking to a number of charities, they will have a building fund, if you like, and that's because over a certain period of time they've raised money for a building, and that's obviously where you get all your members on board, because they all hopefully want to be part of a really fantastic project in helping their charity have their own building, because that can add a huge amount of value to the community and to the charity, etc. Obviously, from a finance point of view, it's a bit of a chicken and egg, because we can't really go and raise a mortgage until we know that there's at least 30 to 35% deposit. And then we look at all the steps that Des and I spoke about in terms of income, affordability, etc. I don't know if that really covers it, but
yeah.
Hopefully that's
I think, I certainly, I'll add to that. I think it's often in my opinion, it's pretty dicey if you're wanting to buy a building, but you have to lean on either the local community or you have to lean on the members. You have to be, for me, you need to be looking at potentially other types of income. And just because you don't necessarily have the building doesn't necessarily mean that the church cannot start something. There are many organizations that start and rent somewhere where they can run whatever they're running, whether it be, if you already lease a church or you're in a building already, find out whether or not that's something that you can run other services in. So that you can actually start looking at the types of income that you could be bringing in. What does the community actually need that isn't already there? And this is also another quite a funny misnomer. Actually, there are a lot of charities that seem to think, and the churches that think, every service that they put on has to be free. And that's not true. Charities are allowed to charge like any other organization. You just must do it with public benefit in mind. And then clearly there will have to be a certain amount of pro bono that you may be giving out, which is what makes you charitable in the first instance. I often refer to a fantastic example, a private school. Private schools, most private schools are actually charities, yeah? And the reason and how they keep their charitable status is by allowing local groups and other maybe local authority schools to come in and use their facilities. Yet the parents that pay for their children to go to those schools pay significant and exorbitant amounts of money, thus raising a separate revenue stream. Now, I'm not suggesting that you're all going to go out there and start sort of private schools, by no means, but I think you need to think deeper and think harder than just necessarily go into the well that at some point will run dry. Members are also struggling with cost of living and so on and so forth. You need to think more innovatively in terms of how you are going to be bringing money into your organization for you to then go on and do the things you do. And just like the guys mentioned earlier, those things are then seen as brownie points, plus points, because they are additional income to supplement the income coming in from your members. So that would be my view on that.
Well, I feel like what you're saying, Des, is just because a charity is a non-profit organization doesn't mean they can't be entrepreneurial. And that's ultimately probably a word that I was thinking about the whole time you were, stating your point. Try and be entrepreneurial as well. Just because you're a charity doesn't mean that you can't make money in those ways.
Absolutely. All the difference between a charity and, say, a company is that a company is there for profit. A charity is there not for profit. So the idea that you would be, if you like, making profit that would go back into your building means that you are actually depleting that, what would be look as profit, into a building for you to then better serve the community, your members, and anybody else who may benefit from it.
And I love that. And shameless plug here. So Good to Give, we are all about helping churches become more entrepreneurial. And we're actually launching a podcast to that effect called The Business of Church. So yet another reason to follow us on YouTube. But I digress. I will post that link. Let's get into the next question. So if you already own your building and want to sell your church to a developer and use the equity in the building to purchase another bigger building, what should you look out for?
That's me. My biggest concern is developers. They know how to sell themselves, and they're the ultimate salespeople. And I've been on the other side for 5-6 years. I work for a developer, putting sites together, and I'm negotiating with maybe an owner of a little industrial business, and it's my job to make him like me. And I can sit opposite him and think, why is he selling me his building at the moment? Why isn't he taking his building to the market? And it's all about connections. And I've got many developers who are friends, but genuinely, I would advise you strongly not to do an off-market deal, or at least take some independent advice, because it could be hundreds of thousands of pounds, possibly millions, that you are missing out from the deal just because you've built this relationship and someone has come to you through a friend and a recommendation. And I hear horror stories. I was speaking to a church just off the Old Kent Road, And they brought in a friend who was a solicitor and said, yeah, I'll help you. And he started to piece this deal together, and he made them sign a contract. And now that church cannot sell their building to anyone else because they are tied to this guy. And it's like an option, and there is no time limit stamped on this option. And they've been walked into a position through pure naivety and being nice people. So I know I've gone on a little bit of a divert, but please, I've seen horror stories out there from people within the church community and from developers talking to churches and ministries. Just don't believe what you hear when you talk to property guys. They are sharks. It's a hard word to use, but they are so tough and they know how to play the game. So that's number one. Yeah, just take care, take second advice, go to someone who can go and introduce you to more people before you do that deal. Okay. Can you repeat the rest of the question for me again, please? Because I know I went on a bit of a rant.
Sure, no, that's okay. So if you already own your building and want to sell your church to a developer and use the equity in the building to purchase another bigger building, what should you look out for?
Well, if the deal works, then I think that the question almost goes over to someone like Dan in terms of how you use that and what you need. Developers are generally quite smart though. They'll want to not give you a lot of money front end. They'll say, here's an option for a period to buy this building. Or what often happens, and it's coming very common, is a developer will come to you and say, let's JV this together. So you put in the building, we'll put in the cost, which will basically be the planning cost. And then at the end of it, we'll build a scheme, and then we'll pay you from the uplift in the value once the planning consent's achieved. Or sometimes, all right, we'll give you one of the flats in the scheme or something like that, and maybe you can extract your value. But I reiterate, it's an absolute minefield, and handle with care. But what you do with that money thereafter, how you maximize that once you've got it, I'm not sure I'm the right guy for that. Anyone else got any ideas?
Can I just add as well? I think it's important that you think of your churches just like you think of your home that you're living in. If you had a buyer, let's assume that you're getting the right price for your home, and Alex is spot on. You know, if you start getting offers from private people, just sense check that, speak to someone like Alex and make sure that if you are going to sell, are you getting the right price for it? Could you be getting more? But just like the house that you live in, if you've got a buyer on your house and you want to use that equity to go and buy a new house, would you leave yourself homeless and then start looking for a house? Or would you line up your new home so that everything happens simultaneously? You sell your church, and at the same time, you buy a new church at the same time, so your members still have a home and everything happens at the same time. That would be my advice.
Yeah, go with that. And I have seen it. I've seen churches, developers say, okay, we'll buy it, but we'll have a delayed completion for 12 months or even 24 months. But at the end of it, you've got to sell us the building. And within that 12 to 24 months, they have not found a building to go to, and they are homeless. They're contracted to sell. They've got to walk out those doors. And it proves a disaster, because then they have to actually go back into the rental market, and any equity that they built is just flying out the door.
Thank you all for that. So another question here from
Katrina?
Yep. Can you hear me?
And now?
Okay, great. So another question from John Coyle here. So we have tried to get a loan mortgage in principle, but been told by the bank we need to have a property. So we cannot get finance in place until we have a property. Does that?
Yeah, can I jump in? I know this is probably an answer for Dan, but I get this question quite a bit. And I actually say, well, just use this building, role play it. Yeah, at least you can get your offer and you know where you stand. Dan probably wouldn't appreciate that because he's probably spent time and money putting them together. But you just need to pick a building, in my opinion. But maybe I'm being a little bit too cavalier.
What I think, and I don't know if Shane agrees here, it's coming from the same place. I don't necessarily think that AIPs are a little bit different in this world. It's not quite the same as, again, where Des, you asked me early on, there was a question around what is the difference between residential mortgage lending on a residential versus a church. You know, on a residential, you could, a mortgage advisor could, spend half an hour, punches some information into the Halifax website, and then that will spit out an agreement in principle. for me personally, I don't think they're worth the paper they're written on, but that seems to be the norm. There isn't quite the same process in this type of lending. It's more a case of, I would say, speaking to, if you speak to an advisor like me, I would sense check everything, and if need be, put in, go to a lender, or someone like Shane, his credit union might be able to put together some indicative terms, having stress tested the income to say, look, this potentially works subject to. And I think that I don't think you necessarily need to have lined up a property to do that. I actually think it's more sensible that you speak to people like us to say, this is what we believe you can afford up to, and this is what the costings could look like. And it's just really taking that email to, whether it's an agent or a vendor of a church, and actually put it in front of them and said, look, I've done my due diligence. I've even got some indicative terms. That should really be enough. But I always offer my services as well to churches and say, look, by all means, get the agent or the vendor of the church, depending who you're dealing with, to pick up the phone to me, and I'm very happy to qualify you and say that I've done my due diligence. For me, that should be enough.
Can I just jump in as well? Me and Dan have quite a lot of conversations like that, where I might have several people bidding on a building, and I will just flip their details over to Dan and say, can you have a quick look? Can you talk to these guys? And he'll come back to me and just say, look, there's some substance there. I reckon I can. My professional opinion, it's going to take a month to get that deal together, but I know. Again, you don't necessarily need the building. Dan's now qualified that guy or that ministry. So instead of being one of the masses, he has now got into my hot list as a credible buyer at a certain level of money. You don't need the building.
Great. Thank you. Thank you. So I'm going to take the last two questions live. So I can see Caleb McIntosh and Isaac Ayani have raised their hand. So actually, Caleb, if you're still there, I'm going to allow you to talk for a second and ask your question live. Caleb, are you there?
Yeah, yes, hello.
Great.
And hello to all the panel. I think part of my question's been answered. I was going to consider the fact that we are in a lease whole building, and whether or not in the future, it's a 10-year lease. I want to be out before 10 years, or at least ready to leave at 10. And whether the regular payment of the lease could be used as a potential possibility of generating enough credibility to move to a mortgage status with a freehold property. Does that make sense?
Shane, do you want to cover that one, or do you want me, or should we both?
Yeah, so in answer to your question, Bishop McIntosh, we would use that assessment as part of the affordability assessment. So if you were already paying a sum of money towards a lease, then we would then measure that against what the monthly loan repayments were against the loan that you seek from us, and then see if there was any differences, and then work it out from there. So if the lease amount covered the monthly mortgage repayments, there wouldn't be an issue. But if there was a difference, then we would simply just need to make an assessment to ensure that it was affordable.
And I'll add to that, and I would say that's a very similar principle to most other sort of charity specialist lenders as well. If you think about it, we're adding that back into your surplus income. So whatever your monthly rental income looks like, that's going back into the pot to enable you to put that as a contribution towards your monthly mortgage costs. So it certainly isn't everything. It's not something that's going to have a humongous part to play in affordability, but 100% it adds credibility for sure. So please, for everyone listening, and I know this sounds obvious, but there's nothing worse than seeing bank statements for a church and seeing that rent has been late, or rent hasn't been paid in full, there's been arrears, because that can go completely the other way. If you are a great payer and you've always proved you paid on time and in full, it adds a huge amount of credibility for securing a loan for sure.
Right.
Fantastic. Sorry, Kat, before you asked it, I think there was one other question. There's a question that's come through that's asking about the £500,000 that you was talking about, Shane, as the maximum amount of lending, and they was asking whether or not if they had multiple accounts, would it still be only the one £500,000 that they would be able to lend?
So what we could do in that situation is if the accounts were held by different branches of the same church, for example, then each branch of the church could theoretically make a loan application, for £500,000, and we would treat each loan application on its own merit. So if it was the church in Hemel Hempstead, or the church in Brixton, or the church in Manchester, and they're all part of the same body, we would simply treat each loan application at its own merit. And then also we could then secure the loan on the said property.
Right. But each of those branches, so let me just probably add some additional clarity, maybe more for myself. So you would each of those branches, we have one church under one charity number that has 10 branches. Yeah. They're buying a church for a few £1 million or whatever, maybe £7 million or something along those lines. You're saying each of those churches could, if they had a separate account number with the PCU, each get £500,000 potentially against that lending.
Yes, subject to the due diligence on the security that they're looking to secure the loan against.
Okay, that's interesting, because there's going to be a number of churches that we have that are set up in that way. The only difference is they may not have an account with you guys, so one reason why to come along and get involved. Okay, sorry, Kat, back to you.
Yeah, and we're gonna wrap up because we know we're over time. So, question to you, Alex: do you have a list of properties available to buy under 300k mark?
In London, I haven't seen one under 300k in over 5 years. I did one in Thornton Heath last year at 360. I'm looking at a few Quaker buildings at the moment, which I should bring to the market soon. But the cheapest one we'll probably guide is 400. They're quite small. Actually, there may be a very small building in Pinner, which I'm going to bring to the market, which may be under 350-ish, could be under that limit, but it's very rare. They are absolute jewels within Greater London. And the problem is, if they come, it's an absolute bun fight to secure them, because people have the cash and they just outbid the people who are going to do that by way of mortgage.
Okay. He said he's based in Midlands.
Okay, different story. Okay, so my strength is very much within the M25. The moment you step outside the M25, there's almost a little bit like the residential mentality. So residential estate agent mentality. So, for instance, I'm not from Birmingham or I'm not from Edinburgh, but if you go into those different town centres, there's probably only 2 or 3 commercial agents in those town centres. So a ministry in that location can find them, sign on, and hopefully if that building comes available, they'll be able to secure it. I do get regularly sent buildings around the country. It is something that I'm thinking about as a business to start to focus on a little bit more and create that database. But I actually waiting for someone to come and work for me. We've just employed someone to possibly give that job. It's on his list of jobs to do. Great. But I don't have it as we speak.
Do you mind if I just add sort of on topic but off topic at the same time, because this might be quite useful, and I'll try and be quick because I know that you're wrapping up. Alex mentioned something earlier about cash bidders. You will always be ahead of people getting mortgages. The one thing that I've done before, and Alex knows about this as well, is I know there's often lots of charities and churches that are looking to acquire buildings, but because they're not cash buyers, they drop right down the pecking order. And the one thing where we've helped churches before is we do a lot of bridging loans for churches, and we see bridging loan as it's the next best option to being a cash buyer. And if you get it right, and we can move quickly enough, we can position ourselves as good, as cash buyers, if you like, if we find the right lender that are going to be more sort of traditional asset-backed lenders where we can move quickly. So for everyone listening, please don't be fazed if you see a building and they say you can't move quick enough because you need a mortgage. There are alternative options where, again, we can make you as good as a cash buyer, and we've got purchase over the line in a matter of a couple of weeks through the means of bridging. So something to be mindful of, and something that we can help you with.
I think it's very true, and Dan has a great reputation in the market. So if I were looking at one party showing they've got 4 million in the bank, and I had Dan saying I've arranged the bridging at 4 million, actually Dan would have more weight, partly through relationships, but also his relationships, because Dan's sticking his neck out, they are going to deliver and the money's there. Or someone's saying they've got the cash. I don't know him from Adam. So yeah. I agree. We've done
obviously, obviously with bridging loans, you're paying a much higher interest rate. So you'd be looking to, you'd be looking to really keep that in place for a minimal amount of time. I mean, what would be, are we talking 6 months, 12 months max? Or...
Yeah, I think there's a couple of things there. So firstly, sometimes you can secure a building at Alex may say yay or nay, but you can secure a building at a cheaper level if you can perform quicker. So sometimes you've got to look and say, okay, if I'm paying a bridging loan at, I don't know, let's say circa 10% per annum and 12% per annum, right? If you calculate what it's going to cost you versus the potential saving you may make on the price because you're the one that can perform the quickest, you can find that the cost of funding is cheaper than actually what it would cost you if you're allowed to buy this in over a 3-month period at a price that might be 20% more. Yeah. So in other words, believe it or not, you can make a financial saving on bridging just by means of getting a better discount on the building. Typical term for a bridge is 12 months, but obviously it's important there's an exit. That's what a bridging lender wants. And obviously my job as an advisor is to make sure I'm comfortable there's an exit. Now that exit could be purely the comfort of, knowing they can raise the money for whatever means that might be. It could be through the members. And as you said, Des, it could be through other revenue streams. Alternatively, the most common exit will be, going to a company like Shane's or a charity bank or whoever the lenders we deal with, and we actually arrange a remortgage to take the bridging loan away from the bridging lender to a bank on a 25-year term.
Right. For the benefit of the listeners, and probably just the last thing from me, in the event that they said, right, okay, we do want to go there, we're looking for a building, we're gonna go down the road of a bridging loan, must they have the property in mind first, or can they kind of have the facility sort of teetering on the brink so that they can press the button and move?
A bit of both, really. The thing is about bridging is it's more about the security than it is the borrower. So it's very difficult, showing a property to a bridging lender. Yeah, I mean, if we've got a good understanding of the location and the building type and the building value, I would always suggest that you speak to me so we can just sense check it to make sure that, there is a bridging lender that would get comfortable with this building type. I think that's quite important because they are traditionally asset-backed lenders, but there's nothing stopping someone from calling me and saying, would I be eligible for a bridging loan? Let's have a look at it. But one important thing to remember is the deposit requirement doesn't change. You're still going to need your minimum of 35%. And in actual fact, you would typically need more because bridging lenders tend to deduct their interest over the year. So the positive about that is there's no affordability checks. That's really important. But on the flip side, if your annual interest is, let's just say hypothetically 100,000 at 10% of $1 million, you know that your net loan is going to be 100,000 less. You've got to make sure that you've got the additional deposit requirement there.
Yep, get it. Okay, nice one. Kat, over to you. And
yeah, so we're gonna have to wrap up, guys. And I see questions here. A couple of things. So you're already calling for a number 3, a part 3. As you can see, there's so many questions that coming in. Every time we do this, there's more demand. I actually can still see registrations popping up for this. So demand for this is crazy. I can see that a number of you are asking for details of the panelists here. What we are going to do is we have our charity advisors ready to start calling each of you tomorrow. What we'll do is we'll make those introductions as and when applicable once we've spoken to each of you. So don't worry about that, that will happen. The other thing I want to say is this replay and part one, if you haven't seen it, is on our YouTube channel. We will also put details of the panelists there, and so yes, so you can see, actually no, this is not, I can see that you can't see this, so let me post it in the chat so you can see it. Bear with me a second. I want to make sure you guys have that and can see it. So the replays will be here, so if you have, you know, you want to send it to someone or watch it again, and so yeah, I guess we'll have to speak to the panelists about a part 3, because I can see you asking for that. You will all be contacted. Yeah, so many questions coming through, but we have to end it here. But look out for further details from us on the next one. And I'm going to hand back to you, Des, to close out.
Okay, great. Okay, well, like I was saying earlier, I'm really, really thankful to the panelists for joining me and myself and Kat up here today. I think it's been extremely informative, and I hopefully I can speak on behalf of all of us here. We're happy to do a part 3.
Yeah.
Sure. Yeah? Okay, excellent. So everyone can look for those who are, because I've seen some stuff popping up, you know, people who want to join, or is it too late to join, and so on. So
can I just throw something else out there just for the part 3? It's just a weird thing that I learned not long ago. All right. I know there is a thing called the Place of Worship Enfranchisement Act of 1927. If you are in a lease of over 21 years, you can force the freeholder to purchase that building. Didn't know about that, but you can, just like a right to buy. So some of your tenants, it may be an angle. They may actually be in a building that they've got absolute legal right to buy. Just throw it out there.
There's some free value for you.
Yeah.
Yep, I think that's where we start on part 3.
Yeah, I'll bring someone else on for that one. Yeah,
yeah, absolutely. More the merrier. We're all about knowledge on here, and we just want to impart that knowledge to the listeners. So guys, follow us on all of the standard platforms that will be mailed out to you. Join us on our YouTube channel if you really want to get access to all of our videos and everything that we've done or that we are going to do. Please sign up, share, like, do all of the usual, and we look forward to seeing you guys definitely on part 3. And like Katrina said, our charity advisors, as of first thing tomorrow morning, will start calling round, making relevant introductions and so on, as is applicable. And yeah, thanks again for joining us. It's been a fantastic afternoon. Thank you to my panelists, Daniel, Alex, Shane, absolutely fantastic. Okay, take care. And Kat, I'll leave it now with you. Goodbye.
Perfect. Thank you all. You've been great panelists. Thank you so much. I'll be in touch with each of you. So grateful for your contributions today. Des, always a pleasure. Thank you all so much, and we'll absolutely speak soon.
Okay, take care, guys. Bye-bye.
Take care. Bye-bye.
Bye.